Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is, of course, Friday, expirations day for options, triple witch. Actually, one could argue quadruple. Nevertheless, it is the 17th day of December, a great day, and 2010, looking at another couple of weeks to this year. Actually, right now we're looking at MA's Q Trader, which, as you may have seen before, is just simply an astonishing portfolio. We'll look at it in a second, but as mentioned, we're going to look at a chart of the market. This is the daily market, the daily cash market in the S&P 500, and as you can see, all signs have been bullish since way back when. In actuality, we waited, given the price technical movement and this supreme high right here, we waited to go to the bullish camp, although traditionally we would have gone bullish around 1120 or so. We're now at about 1245 or 100 points, so essentially we missed the trading opportunity there, and it happens. Put up about 1600 points over the last couple of years in the S&P, and every now and then you will miss a trade given certain dynamics. Having said that, we did mention all of the bullishness over the last several weeks, although we've held neutral for the lion's share of this move, and then actually went to bearish recently, I believe around 1200. Correct. We went bearish around 1200 on this break back below, I believe. So we went ahead and put on some short exposure, officially went to bearish side, and obviously that has gone against us for now, but we're going to hold. There's quite a bit of complacency rampant in the market in terms of sentiment indicators that we look at from a contrarian perspective, suggesting that the bulls may be a little overbought here. Could get very interesting over the next 2 to 3 weeks, and traditionally make pretty good money in the last couple of weeks of December and certainly into January. Get a lot of movements, a lot of jostling, and definitely some great opportunities to participate in profit making on the market. So nevertheless, we are officially bearish. As we've mentioned, we're holding on to our longer term bearish exposure, but as you can see, all of the signs continue to point to the bullish side. 50% bullish case is the bias, 30% bullish case, 20% bullish case. From a trend following perspective, the price technicals are bullish given this break above 1200 to 1225, we'll call it. We've now just retested a nice little double bottom off of the intermediate term measure of trend following support resistance right there. Beautiful retest. We actually did mention, but nevertheless we did actually expect this level to hold and to move back lower. Spending a couple of days above here, we're actually just going to wait and see if this break is actually confirmed. If it is confirmed, we're certainly going to move back to the neutral side and await another trading opportunity, because as you can see, the market, as mentioned, in terms of trend following perspective, horizontal price technicals, the momentum, the directional movement of the market is all on the bullish side. So it's bull, 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 bullish reigns supreme. As mentioned, the sentiment, we did just close out on the last video. On the first, we did close out a very nice long setup in this free system, the VIX equity call. But as you can see, look at the VIX just plummeting to a very key buy level of 15 or so in the index. Now it could certainly bounce around a lot, which is why we're going to go to neutral if this break above, we'll call it 1225, continues to hold, because how can you buy a market that with the VIX at 15? We actually just did get a sell signal in the equity to call ratio. As you can see right there, we had immense complacency. Of course, it is a triple witch, but nevertheless immense complacency the day prior on the 16th, day the 17th, Friday, as mentioned. Immense complacency, and we've seen a snapback. In other words, the fear is coming back in. Of course, bit skewed given its expiration, but nevertheless does merit, in the broader scheme of things, attention, suggesting that the again market could go lower. We just don't know when. As it's stated, the market, actually we're going to pull back up where we were. As it's stated, the market should have rolled over here given this immeasurable resistance that we've seen right here. Now, we did expect this move, although we didn't participate in it given the resistance. We did expect this move, and mentioned that there would be, if we got above here, there would be quite a bit of potential to the upside in the S&P and the stock indexes of the U.S. market, and so far that's what we've seen. Nevertheless, from an official standpoint, we have maintained bearish exposure from 1200, so we'll wait and see how that, of course, being long-term exposure, wait and see how that plays out. But back to the intraday, here's a look at the intraday. Right there, these are our proprietary indicators, kind of how we gauge the market and where it's likely to go. And as you can see, the bulls again, we've had some bearish indications of late. As you can see right there, bearish, bulls have been buying early and bears have been selling into the close. It was the antithesis of that yesterday, and we've seen a bit of it today. But of course, it could be expiration driven. And as you can see, we have had some bullish indications the last couple of days, suggest the bulls are in control. We've got a little bit of green here. Bears were in control, as you can see from our underlying proprietary indicators. Bears are in the red, and as you can see, they've been in control. So now the bulls are in control. But nevertheless, the market essentially waxing and waning, as it were, and with no clear direction. If you would like a free informational ES trade of the day, there's really not much to pick from. I mean, it is a very narrow range. One could argue a move above 1242 could bring you maybe to 1245. If we get back down to 38 to 39, one could buy from 38 to 40, essentially right here. Go ahead and target a move from 42 to 45. That would be the most favorable opportunity, but again, out of a 5-star trade, that's only going to be a 3-star trade given the choppiness that we've obviously seen. Look at this early session. Now, granted, we've had a bit of a trend and the bulls are certainly in control, but it's not that particularly impressive. So a 3-star trade, day trade, buy from 38 to 40, go ahead and target 45, 44.50, we'll call it on that trade. On the sell side, probably not much on the sell side as it stands, although the resistance is marked around 42. For those short side players, if you would like a short setup, obviously you want to sell at 42. Go ahead and target 38 on the intraday standpoint. Having said that, how have our portfolios been doing? Well, as mentioned, the Q Trader, which has one swing system, the venerable swing system 5.0. We didn't get a chance to look at that, but as you can see, look at that. Out of 582 portfolios, grabs the number 2 spot over the last, this was last quarter, over the last 3 months, and the number 1 spot with a 40% gain in just September. As you can see, 40% gain in September. If you go back 3 months from there, 128%. If you go back 18 months, you have or 1 year, 220% profit, and 2 years, maybe 18 or 19 months, 353%. So this thing has just been essentially a money-making machine, as you can see. A little bit of drawdown there, but really at new highs. We're going to go ahead and take a look at the how it's been doing lately on this third-party website. You can get it for $500 per month for the portfolio. It's a $15,000 portfolio, I do believe. Actually, we can pull it up right here. And the Q Trader is a $10,000 portfolio. So there you go. Over the last 16 days, it's made 25%, which is pretty much on par for most of our portfolios. As you can see, the matte black up close to 20% or so, but average gain has been about 20%. Triple Threat Trader HR coming in with a 40% gain, but the real standout, MapDT, venerable MapDT up 45%. But the real standout has certainly been the Master 5K. Trades the ES and the Russell, just one contract in each, and has really been absolutely outstanding with an 80% return just over the last 16 days. And of course, we've mentioned that a few times. There's some examples of how it's done from November 24th to the 6th day of December. There's the actual trades that were put up. These, of course, are hypothetical fills, live trades that were sent and filled, but not actual fills. These, again, are another third-party tracking site. These are the fills that they have reported. But that, of course, is the Master. So you have the Master and the Q Trader, definitely a $5,000 portfolio. The Q Trader you can get for a quarter for just $1,200 a month. We've got our Double Our Money sales event coming up, so be sure and stay tuned for that. If you have any questions, feel free to go to the website, chat with the support team live, or shoot us an email to admin@MiniAnalyst.com. Hoping you're having a great holiday season. And of course, stay tuned for next week, should be our annual Double Your Money sales event. I know a lot of you guys wait all year for that, so we're going to take advantage of that probably next week. And we'll see you then.